Hi, this is Kerry Artak with Wicked Stocks, bringing you your daily Apple report for Tuesday, October 31st, 2023. But before I walk you through the charts, as usual, just want to encourage you to please click like if you haven't already, subscribe to the Wicked Stocks YouTube channel, share the content if you would with friends and colleagues, and check out wickedstocks.com, where we offer a full suite of both daily and weekly analytical videos just like this one. Daily analysis in the SPY and the Triple Q, that is the S&P 500 and NASDAQ 100 ETFs. Weekly analysis in the S&P 500 Index, the NASDAQ 100 Index, the Long Bond ETF, the TLT, as well as 2 individual stock picks a week that you never see on YouTube. That is 8 a month that cater to the 3 to 5 week swing trader out to the 3 to 5 month near-term investor. We're always looking for at least 20% moves on those stock picks, and you can check out all of this for no cost for 5 days. We offer a 5-day free trial up front with a wickedstocks.com subscription. So sign up for wickedstocks.com, check it all out. If you don't like what you see within 5 days, you can cancel your subscription at no cost to you whatsoever. On with the charts. Before I jump into the charts, actually, I want to mention one other quick thing about wickedstocks.com, and that is the last week we put out 3 meaningful stock analysis videos: NetEase, Alphabet, and Cisco, and you can check all of them out for free by going to wickedstocks.com and taking advantage of that 5-day free trial. Here we go with the charts. Jump to the big picture, work our way into the day itself. Just a reminder, and we did last week retest this 165.57 to 166.99 long-term support area that we settled above in May, indicating then a longer-term buy signal. At the time it was like 3 to 5 months perhaps. Now it's looking more like into the second, third quarter of next year. Still anticipating 230.13. Whether you act on that, I think you can bottom pick the mid 160s, no doubt, all day long. Whether you hold out for 175.58 over the next couple of weeks, I'll show that in a moment, or whether you hold out for 187.38 over the next couple of months, I'm showing that right here, or whether you're actually a long-term investor who's holding out for this 230.13 channel top that I think is likely to be tested by this point next year or sooner. That sooner would come with a settlement in the coming weeks above the 187.38 descending channel top, which should set this up for 5 to 8 months or less. It could be one of these again to the upside, 3 to 5 month rally to 230.13. That is the big picture. Now, of course, if we close below 165.57 at the end of the week, by a 1% margin of 163.91 or lower at the end of the week, that would then set up just the opposite, a 3 to 5 month sell-off into the low 130s. That is the big picture. The mid 160s still a significant support level and pivot point as we move through Q1 of next year. So let's take a look. You know that we've been bottoming out in this 165.57 to 166.99 region. You probably also know that we closed yesterday, Monday, above this 167.84 descending channel top. We've reduced to a minor point because it's so close to 166.99 anyway, and it does. We mentioned that once testing, which we did last Thursday and Friday, the 165.57 to 166.99 region, you can consider 175.58 to be a 1 to 2 week target, and 186.92, that 187.38 level on the weekly chart a moment ago, a 1 to 2 month objective. So, you could consider 167.84 to be session containment if you like, but we've reduced it just because I don't like to throw a bunch of meaningful levels all on top of each other. I like to just focus on the big picture, which is still 165.57 to 166.99, expecting 175.58 over the next week or two. Now, in terms of the upside, we do, where are you? Have an intraday resistance, 171.37, nothing more than the high of the low. This low last week was the lowest this market has been since the July high, so it has pivot point qualities. And if we push through 171.37, we could actually, by the closing bell, reach 175.58. I do think the likelier outcome is a settlement today above 171.37, then indicating 175.58 within 1 to 2 days. Wednesday, Thursday, we test it. We can fall off at 175.58 through next week and back once again into the mid 160s within a week or two of testing 175.58. So in terms of, the 3 to 5 week, 1 to 2 week swing trade, that opportunity presented itself last week, Thursday, Friday, testing long-term support, presented itself again with the Monday settlement above this 167.84 formation, and expecting 175.58 by the end of next week or sooner. That's sooner likely to materialize if we can close today above 171.37. So if you're an aggressive day trader, you could consider selling 171.37. We came very close to actually testing it on Monday, and we can from here quite easily back off to 167.84 or perhaps even into the 165.57 to 66.99 region on an intraday basis. But if we happen to, I'm going to say, merely pushing through 171.37 today likely marks a good low for, I don't know about a good low for the day. It depends on, how low, where we open, so forth and so on. But I will say the emphasis is still up. Whether or not we can then test 175.58 intraday is another question altogether. But that is really our next sellable resistance if your time horizon is anywhere from 3 to 5 days to 1 to 2 weeks. Keep in mind, though, that we are anticipating 186.92 as a 1 to 2 month target. You may have bottom picked this area last week, and now you're holding out for 186.92, and I think that's great. Especially if your time horizon is typically 1 to 2 months. But also know that on the way up, if you didn't bottom pick the mid 160s and we happen to close above 175.58, I think we're probably 2 to 3 weeks away then from reaching this 186.92 descending channel top, which is once again on the weekly chart at 187.38, well suited to absorb buying into possibly through December trade. And from here, we can fall back again into the mid 160s. As I've been saying for some time, we could fill this wedge out through the rest of the year. I think I've covered the upside pretty well. Now for the downside, and that is to say, what if we happen to, I'm just going to go with close below 165.57. I don't even expect to see this level today after the buy signal that occurred yesterday above 167.84. But if we do fall back into the 165.57 to 166.99 region and close below it today, and you probably should throw that 1% margin in at 163.91 just for sort of sell signal reliability, this is what I'm looking for then this week, 162.29. I've reduced it. This level was not updated. My apologies. We're not going to see that today, so this is not a real big mistake. But that 162.10 should really be 162. Sorry about all that. 162.29. 162.29 would be about it for the day to the downside. In fact, what I think the likelier outcome is if we close below 165.57 today, 162.29 tomorrow, and we could perhaps by Friday's close test 157.62. Also, later in the week, if we close below 165.57 by the 1% margin, then I would consider 157.62 to be a 1 to 2 week target. That would be a nice swing trade to the downside for 1 to 2 week swing traders. And then overall, as I mentioned earlier, closing the week below that 165.57 level would signal 132.39 within 3 to 5 months. So if we close this week below 165.57, no good reason to be long Apple as we move through the rest of the year and into the first quarter. In fact, you want to position yourself for the short side, and that could mean buying 133 out of the money puts that don't expire for at least 6 months. Until then, as we're testing the mid 160s, and you're an options trader perhaps, and maybe you've already done so, you're reaching for 185 out of the money calls that don't expire for at least several months. Or perhaps if you're longer term in scope, you're reaching for 230 or 250 out of the money calls that don't expire for at least the next full year. I would wait for the settlement above 187.38 though before reaching for these upward strikes, because then I think you've got this sort of sustained protracted rally that is likely to play out through Q1. I'm going to leave it at that for Tuesday's Apple Report. Please click like, share, subscribe, and check out wickedstocks.com for that NetEase, Alphabet, and Cisco analysis. You have a great day.